Where's farmers today, Woolworths, on these numbers and the way the selling has now kicked in, what is the market really saying?
Carson, I think coming into this second quarter sales result, expectations were quite high. We were expecting to see that the food and liquor division had the highest amount of sales growth in around about a year, but it has fallen just shy of expectations. If we have a look at expectations around that food and liquor division, which of course is a key driver of Woolworths share price, we're expecting to see comparable sales growth of between 2.5% to 3.5% for the quarter. It's actually come in at 2.4%, so just a touch below expectations. One of the things that we saw in Woolworths' first quarter result, which was quite impressive, was that we saw inflation coming back in that food and liquor division. In fact, in the first quarter we saw inflation of 0.8%, and we've been expecting that inflation to continue throughout the year, but unfortunately back to deflation, minus 2.8% for the quarter. While that's better year on year, because we did see it at minus 4.1% at the same period a year ago, compared to the previous quarter, that's a bit disappointing. So it does look like that supermarkets division still under that cloud of deflation. No doubt that that's having an impact on that food and liquor division performance. We saw petrol down by 2.8% for the quarter, and we know that the supermarkets have been doing a battle in this petrol area. Back in October, we saw Coles increasing that petrol incentive from 4 cents up to 8 cents. Woolworths followed suit in January, but it does look like it's had an impact in terms of its petrol sales, which were down by 2.8% for the quarter. And Woolworths, Big W, I think a little bit disappointing for Woolworths. Big W was a standout in the first quarter. We saw some great growth coming there, in fact beating our expectations by about 2% for that first quarter. While we did see a growth of 1.6% overall, on a comparable basis down by 1.4%. So if we have a look at Woolworths as a stock and as a potential investment, I think what we are seeing is an acceleration of some store rollouts, because you can see that the comparable sales numbers are weaker than the total sales numbers here. And what we're starting to see is probably some cannibalization of its stores because of the aggressive rollout. Also, there's some uncertainty in terms of the Masters stores and the rollout of those stores as well. So Woolworths, if we have a look at the share price action, this is a 30-day graph of Woolworths share price. You can see it's been an extremely positive one over the last 30 days. It has been a case of buy on the rumour and sell on the fact, and we have seen a bit of selling coming into the stock over the last couple of sessions. I think that's two things. First of all, we are seeing a rotation from some of those defensive areas into some of the more growth areas, because performance on the Australian share market has been very strong. But secondly, we have seen the numbers coming in slightly below expectations.
Julia, an eye on Rio Tinto with reports around the future of Oyu Tolgoi. Tell us about that.
Well, this one's been a bit of a pain for Rio Tinto, and that's because the Mongolian government has been trying to push and increase its stake in this project from 34% to 50%. So it does look like Rio Tinto may be willing to play hardball here. There are media reports that Rio's looking at perhaps halting production in this area. We were expecting to see commercial production coming in the first half of the year, and this, of course, is the world's largest development of the copper mine at the moment. It's a huge project, and when it's online, it will represent around about 30% of Mongolia's output as a country. So the government trying to get a bigger stake, and of course a huge amount of geopolitical risk in this area, but it looks like Rio Tinto willing to play hardball, and there may be a short-term impact in terms of Rio Tinto. However, they're negotiating for the long term. So this is one that we're watching closely, given it's such a massive copper resource. It may also impact on the copper price, putting some upward pressure on the copper price if we do see Rio Tinto delaying production from this particular copper mine. But really watching the Mongolian government's moves and the negotiations there, because we know that since 2011, it's really been trying to push for a 50% stake in this project, as well as increased royalties, and that would be an increase from the current 34% stake.
Julia, just briefly staying in that space if we could, Whitehaven shares on the skids fell as much as 4% from the get-go. They've issued a profit warning. They're blaming conditions being tough, obviously in the space that they occupy. Put into context.
I think two things here with Whitehaven Coal. One, they're struggling with a high Australian dollar, like a lot of the miners are. And secondly, market conditions. So Whitehaven Coal coming out to say that they are expecting a write-down in the first half of the year, and I think it might be in the vicinity of about $66 million, and saying that the second half is expected to be broadly in line with the first half of the year. So Whitehaven Coal, not a good announcement there. We know that we have seen very volatile coking coal as well as thermal coal prices over the last couple of years. The fact that it's come out with this write-down, not a positive for the stocks, but it has been, I guess, not a totally unexpected trend. We've recently seen Rio Tinto with around about $14 billion worth of write-downs. Earlier this week, we saw Anglo America also coming out with some big write-downs. So it does look like those write-downs continuing on in this space after the big majors have come out with some pretty big write-downs over the last few weeks, and it does look like that's moved over to that mid-cap space.